Nvidia just posted jaw-dropping earnings, billions in revenue and profit, beating expectations yet again. But instead of a stock surge, shares tumbled in after-hours trading, leaving investors baffled. Why? Because the stock market is always looking ahead, not just at what's happened, but at what's next. For Nvidia, the bar is set sky high. Even a slight miss or a hint of imperfection can trigger a sell-off. Beneath the record numbers, subtle details, especially in its core business and its relationship with China, sparked anxiety. The result, a lesson in how Wall Street's expectations can overshadow even the most spectacular success. Let's break down exactly what happened and why. First, let's appreciate just how strong Nvidia's quarter was. The company reported $46.74 billion in revenue, up 56% from last year, and easily beating analyst estimates. Net income soared to $26.42 billion, a 59% jump, with earnings per share topping forecasts. This marks the ninth straight quarter of over 50% year-over-year revenue growth, unprecedented for a company of this size. Nvidia's guidance for next quarter? Even higher, projecting $54 billion in revenue, above Wall Street's expectations. These numbers show a company at the peak of its powers, with demand and profitability both surging. But as we'll see, even these results weren't enough to keep the stock climbing. To truly grasp Nvidia's dominance in the tech world, you first need to understand what the company actually sells, and why it's so crucial to the future of artificial intelligence. At the heart of Nvidia's business are GPUs, graphics processing units, which have evolved far beyond their original purpose. Once designed mainly for rendering video game graphics, these chips have become the brains behind today's AI revolution, powering the most advanced machine learning models and neural networks. While gamers still rely on Nvidia for immersive experiences, the real story is how these chips now drive everything from ChatGPT's conversational abilities to the split-second decisions of self-driving cars to the robotics and automation transforming entire industries. Step inside any modern data center and you'll find racks upon racks filled with Nvidia's AI chips, especially the powerful H100 and H200 models. These chips are the engines that process massive amounts of data, making Nvidia the backbone of the world's most advanced AI systems. Nvidia now controls about 80% of the global AI accelerator market. This dominance isn't just about hardware, it's also about software. The company's CUDA platform has become the industry standard, allowing researchers and engineers to unlock the full potential of Nvidia's chips. CUDA is more than just a tool. It's a powerful ecosystem that lets developers build, train, and deploy AI models faster and more efficiently. This creates a deep moat around Nvidia's business, making it incredibly hard for competitors to catch up. So when you hear about the explosive growth of AI, you're really hearing about Nvidia's runaway success. The company's chips and software are the foundation of the entire AI boom, fueling innovation across the globe. That's why every detail in Nvidia's earnings reports is watched so closely by investors, analysts, and tech leaders alike. The company's performance is seen as a barometer for the entire AI industry. But even a company as dominant as Nvidia isn't immune to market jitters. Let's take a closer look at what recently spooked investors and sent shockwaves through the tech world. Despite record-breaking results, Nvidia's stock fell because it missed perfection in two key areas. First, its data center division, selling those all-important AI chips, came in just below analyst forecasts. In a market priced for perfection, even a tiny shortfall in the core business can spark fears of slowing growth. Second, Nvidia's plans to sell a new export-compliant chip to China hit a wall. No sales this quarter due to licensing delays. These two issues, a slight miss in data center revenue and a China setback, were enough to overshadow the blockbuster headline numbers. Investors recalibrated, and the stock paid the price. Let's dig deeper into the data center story. The data center division is Nvidia's growth engine, reporting a staggering $41.1 billion in revenue for the year. This figure alone highlights just how central the data center business has become to Nvidia's overall strategy, far outpacing its other segments and cementing its role at the heart of the AI revolution. That's a 56% jump from last year, a growth rate that would be the envy of almost any company in the tech sector. The numbers are eye-popping, and they reflect the insatiable demand for Nvidia's chips in everything from cloud computing to artificial intelligence. As AI adoption accelerates worldwide, Nvidia's data center products have become the backbone for countless industries, powering everything from advanced research to real-time language translation and autonomous vehicles. But despite these impressive results, Nvidia's earnings missed analyst estimates by a hair. On Wall Street, even a tiny miss can send shockwaves through the market, especially for a company with sky-high expectations. This quarter marked the slowest growth rate in 9 quarters, a notable shift for a company that's been on a seemingly unstoppable upward trajectory. Investors and analysts alike are now asking, is Nvidia's explosive momentum finally starting to cool? Digging deeper, the division's networking segment nearly doubled its revenue, driven by the growing need for high-speed data transfer and connectivity in AI workloads. However, the core GPU business, the very heart of Nvidia's data center dominance, dipped 1% from the previous quarter. While that may sound minor, it's a significant signal for a company used to relentless growth. This dip was tied directly to China, where new export restrictions and shifting demand have created headwinds for Nvidia's most advanced chips. For investors, this confirmed long-standing fears about decelerating growth in a key market. The China slowdown is more than just a blip. It's a potential warning sign for future quarters. Even a minor sequential decline in the core business can rattle a stock that's priced for endless hypergrowth, and Nvidia's valuation leaves little room for error. Make no mistake, the numbers were still stellar by any normal standard, and Nvidia remains a dominant force in the industry. But for a market that's always looking ahead, the latest results raised a yellow flag, signaling caution amid the celebration. Now, let's talk about the China problem, and why it could shape Nvidia's future in ways no one can ignore. The China story is all about geopolitics colliding with business. U.S. export controls banned Nvidia from selling its top AI chips to China, so Nvidia created the H20, a chip designed to comply with the rules. Wall Street expected billions in H20 sales, but Nvidia didn't get the export licenses in time. Result? Zero H20 revenue from China this quarter, and no sign of a quick fix. This instantly wiped out a major expected revenue stream and injected uncertainty into Nvidia's outlook. It's a stark reminder that even tech giants can be blindsided by global politics. The financial impact was immediate. Here's how it hit the bottom line. The H20 halt wasn't just a headline, it cost Nvidia real money. The company took a $4.5 billion write-down on unsold H20 inventory, slashing the value of chips it can't ship to China. More importantly, Nvidia estimates it missed out on $8 billion in revenue this quarter because of the China block. That's a massive lost opportunity, showing just how much demand is waiting if the situation changes. Nvidia did sell a small batch of H20 chips outside China, but it barely made a dent. If export rules ease, billions in revenue could come roaring back. But for now, it's all on hold. This episode highlights the risks of relying on global markets. Even the best technology can't escape geopolitics. Despite the China setback, Nvidia's growth story is far from over. The next big catalyst, its new Blackwell AI platform, promising a huge leap in performance and already generating massive customer interest. Blackwell Ultra is set to ramp up next quarter, supporting Nvidia's bullish $54 billion revenue guidance. This product cycle could kick off another wave of upgrades across global data centers. Nvidia's software and networking divisions, especially CUDA and Mellanox, are also strengthening its competitive moat. Risks remain, especially with China and sky-high market expectations, but Nvidia's innovation engine is still running hot. The company must keep executing flawlessly to justify its valuation. The stakes have never been higher. Nvidia's latest earnings are a snapshot of a company at the center of the AI revolution, delivering stunning growth but under relentless scrutiny. The company has consistently pushed the boundaries of what's possible in AI, making it a cornerstone in the tech industry. From gaming to data centers, Nvidia's influence is vast and growing. The stock's dip wasn't about failure, but about the market's demand for absolute perfection. Investors have come to expect nothing less than extraordinary performance from Nvidia, and even the slightest deviation can cause ripples. This is a testament to the high standards and expectations that surround the company. Slight misses in data center growth and China sales gave investors a reason to take profits. These minor setbacks, however, do not overshadow the overall robust health of the company. Nvidia continues to dominate in sectors that are critical to the future of technology. Nvidia's future hinges on its ability to keep innovating, navigate global politics, and meet sky-high expectations. The company is not just a tech giant, it's a symbol of innovation and resilience. Its ability to adapt and evolve in a rapidly changing landscape will determine its long-term success. Its leadership in AI hardware and software remains unmatched, and the demand for AI is only accelerating. Nvidia's GPUs are the backbone of many AI applications, from autonomous vehicles to advanced medical research. The company's technology is enabling breakthroughs that were once thought impossible. As long as the world builds out AI infrastructure, Nvidia will be at the heart of it. The company's hardware is essential for the development and deployment of AI solutions across various industries. This central role ensures that Nvidia will continue to be a key player in the tech world. The question is whether it can keep outpacing both competitors and the market's lofty hopes. With rivals constantly nipping at its heels, Nvidia must stay ahead through relentless innovation and strategic foresight. The tech landscape is fiercely competitive, and only the most agile and forward-thinking companies will thrive. For now, Nvidia remains the bellwether of the AI era, and the company everyone is watching. Its performance is a barometer for the entire tech industry, and its moves are closely monitored by analysts, investors, and competitors alike. Nvidia's journey is far from over, and the world is eager to see what comes next.